Hello guys, I'm Paris, the options guy, and welcome back to today's video, and I hope you guys are doing great. This is episode number 26, and again, I hope you had a great week that went by or a good week that went by. But if you did not have a good week, no problem, there's always a week ahead which can be made better. But anyways, pep talk aside, what are we gonna talk today? So today we are going to talk about how the PCE inflation data came out in US and what it is indicating for the Fed and how the Fed can take decisions in the future. Then we are also going to talk about what the RBI can do in its interest rate decision which is due for the next week. And then we are also going to talk about the IPO that is going to come in our markets next week, the Suraksha Diagnostic IPO, and if we should apply to that IPO or not. And in the end, we are also going to talk about how the markets can move in the coming week from a technical perspective. But yes, without any further delay, let's just start with the episode. So starting off with what happened in the previous week, we had the PCE inflation data which came out from the US and it came out at 2.3%, which was in line with the expectations. But with this data coming out, all the three inflation data points that come from the US, which is the CPI inflation, the PCE inflation, and the PPI inflation, all of these three inflation data points have been higher than their previous month data points, right? So that means all of these three inflation figures are showing that inflation is now rising. Now, is this a one time thing, like just a one or 2 month increase and then inflation will again be back on track to decreasing, or is this going higher from here? What do you think? Tell me. Personally, I think that inflation might take even more time, especially given how bond market is performing. If you see bond yields, they are not coming down. And with bond yields not coming down, what the bond market is saying is that we might not see so many rate cuts going ahead in the future. And that can be the reason, because that can indicate that the Fed may not cut rates, and that can happen because of the inflation, because inflation might not come down that fast and the Fed might not get to cut rates. In my opinion, the rate cuts that the Fed has done, the two previous rate cuts of 25 and 50 basis points, were also not necessary at all. Fed should have held its rate higher for longer, because that would have been much better for inflation. But anyways, um, who am I to say, right? But anyways, I think what these numbers are indicating is that inflation might not be in such a good control that the Fed is telling us, all right, that inflation is under control, inflation will definitely come down to the target and all that stuff. In my opinion, that may not happen, especially after the fact that Fed has already cut rates by 75 basis points. But anyways, that out of the question, nothing else really important happening in the previous week, except for one single fact, and that is FIS finally bought shares on Monday of the previous week, and that is after September 26th. So that means between September 26th and between Monday, FIS hadn't bought shares for even a single day. They sold every day in the market. They sold shares every day in the market. So the last time they bought on September 26th, and after that they bought on Monday. And I think they bought like 10,000 crores, if I'm not wrong. I do not remember, but yes, they did a big buying, and I think that especially was I think expected, given the fact after the elections happened, right? Because once the elections happened, BJP won, so the confidence in the overall country was risen a bit, so the FIs were expecting a bit more political stability, because of which they must have done more buying in India. Anyways, that out of the question, that wasn't important. I'm just saying a single fact. I was just stating a single fact. But yes, that is what happened in the previous week. Now let's move on to what is going to happen in the next week, and what are the major events that you should look forward to. Now moving on to what is going to happen in the next week. First of all, on Wednesday we have the Jerome Powell speech. So Jerome Powell is going to come and give a speech, and what you need to look out for in this speech is any comment on inflation. Inflation is now going to be very important, especially as I said, after the reading that we got in the PC inflation data in the previous week, and in all other inflation data points. As you can see that inflation has started to rise again, right, after seeing a prolonged decline. So what will be important is that what is the Fed chairman Jerome Powell's stance on inflation right now. Now he has said that inflation will continue to come down from here also, and we will get to the 2% target that the Fed has kept, right? But still, I think it would be interesting to hear what Jerome Powell has to say, and also what he is expecting. What is the trajectory of interest rates that he is expecting for the coming next few months after the data. Okay, so these are the important data points that you should look forward to. Anyways, after that we have some data and some event on Friday, and that is the RBI's interest rate decision. Now the expectations are that RBI will cut rates by 25 basis points, but you might be disappointed if you keep that expectation, because RBI very well may not cut rates, because they have said that inflation is topmost priority for them, and they will only cut rates if they get proper confidence that inflation is coming down, and they have not gotten any sort of confidence after looking at the previous inflation data point. Now if you see last time inflation, if I am not wrong, just give me a second, I think inflation came out at above 6%, right? So this was very, very bad, because yeah, actually inflation came out at 6.2% in the last inflation reading, and RBI's target is at 4%. So that tells you that RBI is not ready to cut rates. That's what they've said. Okay, that they are not ready to cut rates after that inflation print, right? So I don't think we will see a 25 basis point cut like the market is expecting, and that is where the market could definitely get disappointed, and you might see a good fall, especially in Bank Nifty, because Bank Nifty gets more affected by these interest rate decisions. Okay, so keep that in mind. Anyways, now you could also say that the GDP data that came out, India's GDP data that came out yesterday, that has come out a little bit below, not little bit, but well below expectations, right? It has come out at 5.2%, where the expectations were like a little bit above 6%, right? So the GDP data has come out much more below expectations, right? But still, I think RBI will not be very concerned about the growth of India, right? This might just be a little bit of slowdown, and I think they will focus more on inflation rather than GDP, because they know that overall India is not going to go into a recession so fast, right? So I don't think they will focus much more on the GDP data that came out yesterday, but they might very well focus on the inflation data, right? And so in my opinion, 25 basis points cut might not happen, but still keep this in mind that the market is expecting a 25 basis points cut. So if you want to trade these types of events, you need to understand how the market is going to react. And if you want to know how the market is going to react, you need to understand what the market is first expecting from that event. So the market is expecting a 25 basis point rate cut, right? If the market gets a 25 basis point rate cut, then nothing much could happen, or nothing much really would happen in the event. But if the market does not get that 25 basis point rate cut that it is expecting, then that will be a negative news for the market, right? And so then the markets can fall very much, and so you can plan your trades accordingly like this if you understand what exactly the market is expecting. But yes, that is it for the RBI interest rate decision. And then in the evening, we have the unemployment rate from the US, and the expectations are that unemployment rate will stay at 4.1%, 4.1% itself, like the previous month, but that can also come out a little bit higher, especially given the jobs data that we saw a bit, I think a few weeks ago, where we saw private employment numbers going into negative for the first time after COVID. So that is indicating that the private sector is now on a net-to-net basis actually losing jobs in the US. So And that might be the reason because of which we might see higher unemployment for the month of November. But yes, definitely expectations are 4.1%. So let's see if it comes out higher or lower than expected. But that is it for the next week. Now let's move on to the IPOs that are going to come in our Indian markets next week, and if we should apply to them or not. Now, the IPO that is coming in our markets next week is only one IPO, and that is the Suraksha Diagnostics Limited IPO. And this is an 846 crore IPO, out of which it is completely offer for sale. That means no money will go to the company, and only the promoters are selling their stake who will get this money. So this is a bit of a bummer, because I would have expected, now I will tell you why this is a bit of a bummer in just a few minutes. But yes, I would have expected that some money should have gone to the company also. So anyways, again, after that, if you see, the IPO is already opened on Friday, but it will be open till Tuesday also. And so you can easily apply in the next 2 days of the week, right? Monday and Tuesday. So now, from the listing gains perspective, should you apply to this IPO if you only want listing gains? And the answer to that is no. Why no? Because we don't have any data on the gray market premium of the IPO, and so that's why we cannot tell how much listing gain we can expect. But anyways, I wouldn't really expect much listing gain also. And again, that the reason for that I will tell you in just a few minutes also. So from the listing gains perspective, don't apply for this IPO, because you are going basically blind, right? Basically on luck for the listing gains, right? And I would not, leave my fate to luck, and you should also not do that. So don't do that. Don't apply for listing gains. But from a fundamental perspective, what should you apply to this IPO? So let's look at that, right? So first of all, let's talk about what the company does. Now, this company is a pathology and radiology testing, provides pathology and radiology testing service, and also provides medical consultancy services. So you must have seen pathology labs, right? The blood testing that they do, right? So now the other companies that you can compare it to are Lal Path Labs, right? Very, you can say a very popular laboratory testing company, right? And then we have Vijaya Diagnostics also. Then you have Metropolis, right? And all of these companies also. So this is basically like similar to them also, like pretty much similar to them, right? So the company has its, you can say, operations in eastern side of India, right? And mainly in these four states, which is Bihar, West Bengal, Assam, and Meghalaya, right? These four states. And 95% of its revenue comes from West Bengal itself, right? Just West Bengal. 95% of its revenue comes from just that one state. And this is a bummer, because you should never have concentrated revenues in a single place, because all of a sudden, if something happens in West Bengal tomorrow, right, the company will suffer very heavily, right? Because all of its revenues are coming from just one single state. Anyways, now we are going to talk about that also in just a second over here, because first let's talk about the revenues and the net profit of the company, right? And how it has done in the last 3 financial years. So in FY22, if you see, the revenues were 225 crores. In FY23, they dipped to 193 crores, and now they're back to 222 crores, right? So if you see, again, the trend is not really that great, right? And the same trend you can also see in the profit after tax numbers, because if you see, profit after tax in FY22 was 20.8 crores, and then in FY23 it dipped to just 6 crores, and in FY24 it dipped to it went up to 23 crores. So again, a bit better than the revenues, but still, not as good, right? And you would ask, why is that? Because the company is expanding very rapidly right now. It is opening new test centers, it is opening new laboratories, so that it can expand its presence in eastern India, in more states. And because of this expansion, right, what you will see is that in the coming years, maybe in the coming 2 to 3 years, it will diversify its revenue more. So as I said, that they get 95% of their revenue from West Bengal, right? So they will now get more of their revenues, not just from West Bengal, but from other states also, like Bihar, Assam, Meghalaya, right? And they might also going forward, they might also expand into other states, right? Not just Bihar, Assam, West Bengal and all that stuff, Meghalaya. They might also expand into Sikkim for that matter, or other eastern side states, right? So, and that is what the company does, and I hope you guys understand where the company has its operations in, right? And so, as I said, that they are expanding very rapidly right now, right? They're opening new test centers and all that stuff, and these test centers, or these you can say new expansion, this will take time to generate cash flows, to generate revenues, right? Because when you enter into a new area, you don't expect everyone to just jump onto your ship, right? You don't expect everyone to trust you, especially when it's like something like Suraksha Diagnostics, right? Because this is not something everybody knows in the whole India, right? This is not a brand that everybody knows in the whole India, right? I heard about it for the first time when I researched for this IPO, right? So when you have a brand which is not like well known to your whole country or something, right? Like if let's say DMart opens a store, right, in a new territory, people will not be as skeptical as let's say Suraksha Diagnostics, because a much more number of people know about DMart, right? More than like a lot of people know about DMart, right? So if DMart comes in and opens a new store, you will not be so skeptical, right? You will not be like, okay, I do know DMart, it is opening store for the first time in my area and all that stuff. That will not happen. But with Suraksha Diagnostics, and especially with the healthcare thing, right, when it is about their health, people will take time to trust you, and because of that you will see not such fast revenue generation from its new test centers or the expansion that it is doing. But shortly, once you have that trust, now you don't let go of that trust very fast, so you then make long term customers, right? So if let's say you go on to uh, do your tests for once in Suraksha Diagnostic and all that stuff, and you get the right amount of test, and you get the test done and all that stuff, and they are adequate, right? Then once you do it for once, twice, or maybe thrice, then you don't want to change it, because now you know that I have this reliable testing service that Suraksha Diagnostic is providing, so I will stick with that. I don't want to take any more risk. So as I said, that the new test centers will take time. The new expansion that they're doing, it will take time to generate revenues, but it will surely do that. And so in the next 2 to 3 years is where you can expect this to like bear fruit. This investment that they're doing right now, that will bear fruit. And so that is why I also said that the amount that they're raising for IPO, at least some money should have gone to the company so that it could have helped them to expand even more, right? But that is not happening, which, as I said, because of which it was a bummer that all of the money is going to the promoters who are selling their stake. So I hope you guys understand what the company does, right? So that, considering all of this, what I would say is, if you want to invest in this company, invest for the long term, because healthcare is an evergreen sector. You don't have like seasons in healthcare, right? From March to April, like March to September, you will have very good business, and then after that you will not. That rarely happens, right? Healthcare is like a year-round business which continues to grow, and it is a sort of necessity of life for many people in India, because India is not necessarily health conscious, let's be honest, right? And so healthcare is something like especially like Suraksha Diagnostics, which provides tests, right, lab tests, they will not really go out of business, and they will have this healthy business that will keep on coming. So this is a very, you can say like a steady company, right? So it will not give you a lot of hiccups, right, unless they are like they do something which is very radical. I don't think they will give you any sort of hiccups in your investment. So if you are willing to invest for the long term, like at least like 3 to 4 years, only then invest in this company. And if you are a well informed investor, and by well informed means that you keep up to date with what is happening with the company, what the company is up to. Because if, as I said, that right now at least the company's revenues are very concentrated, right? So that means 95% of their revenues are coming from West Bengal. So you need to be an informed investor and you need to understand what is happening in West Bengal. Is something very, very, like important happening in West Bengal, which can affect my investment, which can affect the company that I have invested in. So if you can keep yourself informed about those things, and it is not really very hard, let's be honest, it is not very hard, right? And so again, but still a lot of people also don't do that. They don't keep up to date with their investments. But still, if you can keep up to date with your investment, and if you can invest for the long term, this is a good company to invest in. But if you want your returns in like 1 to 2 years, investment returns in 1 to 2 years, you might get disappointed. And so that is what you can do with this IPO for the long term, and if you can keep yourself informed about what is happening, right, from time to time. So yes, that was it for the IPOs. We don't have any other IPOs. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see Nifty moving up 0.9% and Bank Nifty moving up 1.8% this week. So if you see this week, we opened with a gap up and pretty much consolidated, right? We saw a little bit of volatility, but overall we just consolidated after opening with a gap up. So what can happen next week? Let's look at that. Now Nifty over here, if you see, has made a good candle, but right now in the zone in which Nifty is, what we will see is that when Nifty goes up, we will see resistance coming in, and when Nifty comes down, we will see a bit of buying coming in, right? And Bank Nifty also same thing. If Bank Nifty goes up over here, we will see a Bank Nifty taking resistance, and Bank Nifty has actually already taken resistance in this week itself. But still, if it goes up over here, we might see again Bank Nifty taking a bit of resistance and then coming down. So the markets, if they need to break out from here and go to new all-time high, they will need to give some time at higher levels, right? Because they cannot really break out from here, right? So if Bank Nifty needs to break out and go up, this will not happen like in a straight fashion over here. Rather, markets will need to give some time over here and then break out over here. Now that might happen over the next 1 or 2 weeks, or maybe it might take like 2 to 3 weeks also, no problem in that. And then the markets might move up. And if the markets have to move down from here, so markets, if they have to move down, markets will need to move down very fast, or rather markets will move down very fast, because whenever the selling comes, whenever the sell-off comes, markets move down very fast. They don't take a lot of time. And so if the markets have to move down, then move down very fast. Then maybe markets might give a little bit of time near the supports that they've made at lower levels, and then they might break down from there. Okay, so I hope you guys understand that. But in the weekly charts right now, markets are looking pretty much, you can say, if markets hold this higher level, we might see again a bit of consolidation and volatility. And if the markets have to move down, we will see very fast move coming on the downside. But what is the FNO data saying? Now if we see the FNO data over here, pros have actually made bullish positions, right? If you see over here, they've exited their call shorts and they've come into call long, and they've also exited their, you can say, put long over here, and they've started to short puts. But right now they've not shorted like a huge amount of puts basically. But yes, they are turning a bit bullish over here. So the data is telling us to be a bit bullish over here, so we will do so, and I'll tell you where exactly can you be bullish, right? So in the daily chart, if you see over here, Bank Nifty is consolidating over here, and if you see over here, Bank Nifty gave a fake breakout over here, right? If you see over here, Bank Nifty had this resistance and Bank Nifty tried to go above it and gave a fake breakout and came down. Now two things can happen over here. If this is a genuine fake breakout that the market has given, the market will move down very fast from here, and you will see a sell-off at least again till 50,200 easily. Even till 50,000, no problem in that. But yes, 50,200 to 50,000 will not be a big deal at all for the markets. But if this is not a genuine fake breakout that has happened, if this is not a fake breakout, and if the markets really have to break out from here, markets will consolidate over here and then break out from here and move up. Okay, so I hope you guys understand that. So that is for Bank Nifty over here, right? So now that is in the hourly charts, and I'll come to the 15-minute chart also. But let's look at Nifty. Nifty on the other hand, if you see again, if you see went down took support, came up, right? And we did see a little bit of sell off, but now Nifty looks like it is again going to move up. So if Nifty has to move up from here, you will see a very fast move coming till 24,700 to 24,800. But if Nifty has to move down from here also, you will see a very fast move coming till 23,400 to 23,200, right? So you will get one move on Monday or Tuesday, basically, where the market will either move up very fast. Nifty will at least either move up very fast till 24,700 to 800, or Nifty will either move down very fast till 23,400 to 23,500. Okay, these are the two levels from where where Nifty can move either up or either down in the next week, not just Monday or Tuesday, basically in the next week. Okay, so in the 15-minute chart, what we need to do is very simple. Now Nifty, if you see over here, has, you know, if I make this resistance over here, Nifty broke this resistance, right? Oh, sorry, Nifty broke this support over here, and then again closed higher, right? So what we need to do over here is very simple. What is Nifty doing after opening on Monday? Now, if you see over here, US markets have closed a bit bullish over here, right? So probably we'll open with a gap up over here, somewhere over here. Let's assume somewhere over here. So we'll need a pullback over here, and then if Nifty is taking good support from this zone, you guys can go bullish over here till at least 24,500, and then you can maybe square off your intraday positions, or you can do one more thing, is that square off your intraday positions till 24,300. That will be your intraday target, and then you can keep a bigger target of 24,500 and 24,700 on a positional basis. So I hope you guys understand that. But if Nifty has to move down, we will open with a gap up over, we might open with a gap down over here, and then maybe take a little bit of pullback and start to move down. So if you open with a gap down, all you need to look out for is any sort of negative price action and good selling, like some sort of selling like this. If you see any sort of selling like this, you guys can go ahead and take a selling position in Nifty. Your first target will be 23,900 on the downside, but after that, you can keep a bigger target of 23,500 also, which will be on a positional basis. So that is it for Nifty. Now let's look at Bank Nifty. Now Bank Nifty, as I said, that if Bank Nifty has to move up very fast from here, it will not take a lot of, it will not move down very fast, right? If Bank Nifty consolidates over here, that means chances are that it is going to break out from here. So what you need to do on Monday is very simple. We'll probably open with a gap up near 300 over here, and then if we take a pullback till 52,100 to 52,000, and over here if you see market is taking any sort of good support, you guys can go ahead and take a bullish trade from here, and then your target can easily be 52,500 on the downside. That can easily be your first target, and on a positional basis your target can be 53,000 on the upside also. But that might take a little bit of time, because as I said, maybe markets might consolidate over here, right? If Bank Nifty has to move down very fast, it will sustain below 51,000 over here. If it will sustain below 51,800 to 51,850, if it sustains below this zone and makes negative price action, you guys can go ahead and take a short position also. First target will be 51,500, which is a round number, right? Which will be an intraday target also, but you can easily keep a target of, as I said, 50,000 to easily a target of 50,000 also on a positional basis. So I hope you guys understand what you have to do in the market over here. Either the market will move up very fast from here, Nifty will move up very fast till 24,700 to 800, or it will move down very fast till 23,500, right? So all we need to do is look at the price action and trade accordingly. Again, there is also the RBI event, the RBI interest rate decision that is happening in our markets next week. So keep that in mind also, because Bank Nifty might consolidate before that event, right? Before that big event, Bank Nifty might consolidate, because there is a bit of uncertainty as to what the RBI will do. So maybe nobody might want to make any sort of like major positions in the market. So I hope you guys understand that. But yeah, that was the market analysis for the next week. So yeah guys, that was it for today, and thank you very much for watching till the end. I hope you guys enjoyed this episode, and I hope your time was well spent in listening this episode. But yes, if you have any sort of suggestions for the podcast, if you want something changed, if you want something, like a new addition to the podcast, do let me know in the comments, or even in my DMs on Instagram or anywhere. And yeah, I will make sure that those things are implemented if possible. But yeah, that was it for today, and I will see you guys in another episode in another week. Bye bye.